So social media is full of e-commerce success stories, but what are the things they're not telling you behind the scenes? Here are 5 problems that could actually sink your business if you don't think about them up front. Number 1 is, as always, cash flow. Often you've got to pay for stock up front. Getting credit terms to suppliers can be sometimes difficult, especially if you're a new entrant. And before you've even sold a single unit of stock, you've got to go and pay for the stuff. So that means cash outflow before you've got your cash inflows, which means you've got to have enough money to keep going. Maybe sales are slowed, maybe they're delayed, maybe it's a seasonal business, maybe if things go out of fashion. Right? All these things impact your sales, which therefore impacts your cash flow. So don't let yourself get short of working capital. Make sure you've got sufficient amount of cash to start with. Linked directly to your sales is your sale price. Not only do you have to cover the cost of the goods you bought, but also you've got to cover the cost of the overheads. And so make sure you've worked out, have you got enough cash to cover the cost of your advertising, your website, and even pay yourself a little bit of profit. Number 2, inventory management. Have you got too much inventory? Or maybe you haven't got enough. Either way, achieving a balance between those 2 things is critical to making a business run successfully. You've got too much stock, you may have to discount some of it and sell it for cheap. If you've got too little stock, you'll miss out on potentially profitable orders. And so learning to balance inventory management is critical to any e-commerce store. Number 3 is shipping and fulfillment. Shipping isn't just about postage. It also includes packaging, handling, and customer expectations when things are going to arrive. So make sure you get that piece right. Costs, especially for international orders and big bulky orders, can really, really creep up. And with the current trade war going on and the Americans blocking a lot of small imports into America, at least without tariffs, your costs could get exponentially high without you even knowing it. Late or damaged deliveries really, really frustrate customers. So again, make sure you package it up properly. Make sure you've got the appropriate packing materials around, and the labeling as well is also critical. Taxes. Taxes vary across every country across the world, whether it's a VAT, a GST, or even indeed no income tax. Import duties, export duties, you name it, there are taxes. Now, luckily, sites like Shopify can help you manage those taxes correctly. But you've got to set it up properly in the first place. Otherwise, again, you're going to be with a large tax bill and not even know it. The final part is customer service. The 2 words here are be responsive. Nobody likes to inquire out where their goods are or their package is and have to wait weeks and weeks and weeks to get a response. Be responsive. Use tools that are available to respond quickly. Make sure if you've got chat bots, make sure they're working properly. Nothing can damage a brand's reputation more quickly than a bad Google review which hasn't been dealt with properly. However, on the flip side, strong customer service will actually drive your business forward and make you really, really profitable. The last tip is, do you know your customer acquisition costs? Every new customer that comes in your business is going to have a cost. It might be as simple as a couple of cents sign-on fee, or it could be as expensive as lots and lots of advertising spent to acquire that customer. So working out your cost per acquisition for each customer is vital, because that number goes straight to your bottom line. And what do I mean by that? Okay, well, let's say you sell a good for $100. That's how much you sell it for. The good costs $40, and therefore you've made $60 profit. Gross profit. That's not bad. That's a good start. But if the cost of advertising for every new customer is $70 on average, it means you actually lost $10 acquiring that customer. And that's not a good long-term business strategy. So this goes back to your actual sales and marketing function. Is the spend on your customer acquisition sufficient, or is the spend on customer acquisition converting the right number of customers the right way at the right time? And if it's not, throwing more money at it's not going to help. Sometimes it literally just is looking at the copy, looking at the advertising, and making sure it's working properly. So don't forget, customer acquisition costs are a key metric for any good e-commerce business.